Hello and welcome to TPAS TV. My name is Charlene Hoskins. I am the president and CEO of TPAS LLC. You are now watching our interview series, now dubbed the Now What interview series. As we said before in our introduction video, this is going to be an opportunity and an outlet for adjusters, independent contractors to come and watch and learn different information about our field. And I only thought that it would be appropriate, seeing that we are in tax season, to discuss and have an interview series with an actual master accountant and be able to get some of those questions that you all may have answered. So this week I sent out a post asking for anyone to send in any questions that they may have for our master accountants about their taxes, what to file, how to file, what to claim. And we have sent those into our master accountant, and we're going to be discussing that here today. But before we get started on that, first let me introduce him to you. His name is Monterio Patman. He is out of St. Louis, Missouri.
Yes.
Achieved his bachelor's in accounting from the University, of Lincoln University, down in Jefferson. Yes, Jefferson.
Missouri.
All right, excellent. And then now you have your master accountant degree that you just achieved from the University of Phoenix. Congratulations.
Thank you.
Excellent.
Appreciate that.
Excellent.
Yeah.
All right, so we're going to roll into this, and we'll make sure that we provide Mr. Patman's information when we are done with this interview, so that if you have any additional questions, that you can contact him and ask those to him, okay? All right, so let's get started. How are you doing today, Mr. Patman?
I'm doing well, very well. How are you doing today?
Excellent,
Awesome.
excellent.
Awesome.
So we've got a couple of questions that came in, and they're quite interesting. I'm sure that you have the answers to them, because I'm sure you've come across tons of stuff, right?
Absolutely. It's that time.
Exactly. As H&R Blog says, it's refund season.
Yes.
So let's hope that we can get these taxes right for some of these independent contractors and adjusters out here, so they can actually see a refund. I ran into some issues with that when I first started before I came to you. We've had
Right.
that before. So, okay. Now, our first question is from Donna. She's out of Mississippi. So what Donna says is that she actually has been working for different firms, so she has different W-2s. And she said 2 years ago her CPA would not allow her to use her mileage, even though she worked over 50 miles away from home. Now she has paid for everything out of pocket, and last year she's having the same thing with the W-2, so she has more than one W-2. And now her thing is that she did work out of state. Now she's using a different CPA now, but just didn't know what totals to give her.
Okay. So this is Donna, correct?
Yes.
Okay, out of Mississippi.
Yes.
Okay, Donna. Well, first and foremost, if you work over 50 miles from your job, the commuter miles is what they call it, are not, cannot be taxed, basically. You can't use those commuter miles, but if you have any other miles that you drive for your job, for instance, you drive 50 miles there, 50 miles back, that's 100 miles a day. So you can't use that. But any other miles that you may go or may use, you can use that. So your last I'm not going to talk about the last tax preparer or CPA that you used at all, but you should be able to deduct something, because it's outside of the norm. Well, just being in the field that you're in, I know you have to drive many different places, and all of the miles that you do out of state, you can definitely be reimbursed for. So what I would recommend to you is you tabulate, or keep an account of how many miles that you're driving outside of the norm of going to and from work. Anything outside of that you can use, especially if it's for your business. The question is, when you're driving, are you actually doing business? If you're conducting business and you're driving, you can use those miles as well. So a lot of people don't know that, but when you talk about your business and you are actually conducting business, you can use all of those expenses. So.
Excellent, excellent. And so that would also apply to, like, say for instance, she lives in Texas and she's commuting to a field position in New Jersey. Though all those miles traveling to and from the different states, and then while she's traveling within those states, she can claim that mileage as well.
Yes. The only mileage that would not be reimbursable is the mileage that she would have done in her home state.
Gotcha.
Anything that's outside of her home state, you can use, because that's not the normal drive that you would have to do for your job or your business. So that is not considered commuter miles. Those are considered travel.
Okay, okay. So hopefully, Donna, that answers your question. If it doesn't, we'll make sure to provide Mr. Patman's information at the end of this interview so that you can give him a give him a call and contact him directly. Okay, moving on to the next question. And just so everyone knows, one of the reasons, if you're wondering why Mr. Patman am I talking to, why is he a good resource in regards to getting these questions answered, it's not just because he's a master accountant. It's not just because he has his own accounting firm, which is Patman Accounting Services.
Yes.
It's also because Mr. Patman here was also an adjuster at one point. So he totally understands as far as what comes back on those W-2s. He understands per diem. He understands the level of work that we do, the amount of traveling that we do, and how we incur those expenses. Everything from getting, taking your clothes to the dry cleaner to going out to eat. So that's another reason why we have him here and using him as a great resource to reference, okay?
Okay.
All right, now moving on to the next question. This is from Jeff out of St. Louis. Jeff, it's a little bit of a broad question for you, but I'm sure you can touch on some of these. He says what items, he has some questions about what items can be claimed. He said, for example, what constitutes that you can claim, what clothing can you claim, or what expenses can you claim as a health expense, or donations to other businesses, etc. So maybe just like a broad list of what all can be claimed. I heard a rumor that if you bought clothes to do this job, which some adjusters may, if you're a field adjuster, you're having to wear khakis and maybe a polo shirt or a button-down shirt. For some people, that's not a part of their normal wardrobe, so they have to go out and buy it, but it won't have a company logo on it per se because they're an independent contractor. I've heard that there are some tax preparers that are saying unless there's a company logo on that shirt, you can't claim it under your uniform expenses. Is that true?
No.
Okay.
That is absolutely not true. I'll give you an example. Nurses. Everybody knows the health field is huge. So scrubs. All nurses wear scrubs. You can be a CNA and wear scrubs. You can be someone that just works in a hospital and you'll be wearing scrubs. Scrubs do not have logos on them. So therefore, they don't fit under whoever gave that information's type of uniform, but they are actually uniforms. So the answer to that is no, that person was incorrect. You can use, well, let me ask this question. Do you have to look a certain way when you go to work?
Yes.
Yes,
Yeah.
you do. So you're spending money. So all those expenses that you are accumulating, you should be able to write that off on your taxes. See, let me just say this, because I always say this. The one thing about Uncle Sam or the IRS that people fail to realize is when you get paid and you tell them, and the company tells them as well as you tell them how much you get paid, all of the money that you don't tell them about, or the money that you have left after you've paid taxes, they believe that you have sitting in a bank account somewhere. But that's not, we all know that's not the truth. We spend money all the time.
Right. Exactly.
So what they want to happen is for us to stimulate the economy. And when you go out and you purchase things, you're stimulating the economy. So you need to let them know that That you're not just hiding your money in the backyard or have money sitting in a bank account somewhere. So with doing that, you need to let them know. So going back to the guy from St. Louis, what's his name? Jeff from St. Louis. I apologize, Jeff. Yes, you can write off your uniforms. So to answer the question, whatever you wear to work, you have to look a certain way when you go to work to either be professional or for that particular job that you're doing. So yes, you can write off your uniform expense. You can write off your health expenses if you go to the doctor, your co-pays, your prescriptions, your if you have to go to the emergency room, you can write that off. That's a facility cost. When you take the ambulance, if you know, God forbid that you have to go through that, but if you did go through that, that's another expense. All of these expenses that you're incurring, whether you've paid them or not, you're subject to write them off on your taxes once you've paid them. Always pay your bills.
Always pay your bills.
Always pay your bills. But you definitely can write that off on your taxes. The list is, it goes on and on. You got laundry expenses. You know, if you send your clothes to the cleaners, you can write that off. Some people have to have certain type of boots or shoes. As a claims adjuster,
yes,
you have to get those. What is it? The bear claw?
Cougar paw.
Cougar paw.
Yes, cougar paws.
Boots. You have to get those boots. So that's an expense it's a work related expense that you can write off. So the list goes on and on and on and on. Pretty much, if it's outside of what you have in your possession right now, you have to go out and actually spend money on it, you pretty much can write it off on your taxes. So, especially if it helps you perform your job.
So everybody going out there and buying laptops and ladders Absolutely. And calculators Absolutely. And electric tape measures and whatever the case may be, you know, all of that is a work expense.
Yeah, work-related expense, absolutely.
Yeah, and even, you know, sometimes when we go to these different orientations for different independent adjusting firms, or even for somebody who's going to be a staff adjuster, for instance, and they have to go for an interview, and the ladies have to go, you know, to Ross or Marshall's to buy an outfit to look presentable in the office or at this particular orientation. Anything from your shoes that you may have to purchase to any clothing items is a good write-off, right?
Absolutely.
Okay.
Yes, yes.
Excellent. So the list goes on and on. And of course, if they want to know something specific, then, you know, they can go ahead and give you a buzz, right?
Exactly. I'll be giving my information at the end.
Yeah,
so,
yeah.
Call me.
Okay, moving on. All right. Now, we have another question. This is LaWanda. She is also out of St. Louis, Missouri.
Okay.
And this is what she says. She said, I just became licensed as an adjuster and decided to file a business under her name as a sole proprietorship.
Okay.
She's still working a full-time job, so she's been tracking all of her expenses, but claiming them under work-related expenses. So her question is, when and how do I use the sole proprietorship status when tracking expenses and filing for my taxes?
Well, to answer that question, when did you become a sole proprietor? If it was the year prior, then you need to start on January 1 of the year that you're filing for.
Okay.
Absolutely. Using all of your expenses underneath your business is way more beneficial than work-related expenses.
I gotcha.
You get a certain percentage of work-related expenses that you can write off, but as a business, you are privy to a lot higher expenses that you can write off. Basically, it's gonna bring down your taxable income, and that's the goal, is to bring down your taxable income. So, because we all want to pay taxes.
Yes.
We all love to pay taxes. Pay your taxes, please. But you're, like I said earlier, you don't have that money sitting in a bank account somewhere. So you want to get your taxable income down and be taxed off of that. For instance, let's say you made $30,000, but you spent $20,000 in your business in a loss after you tabulate all the money you brought in from your business and the money that you put out. You have a $20,000 loss. Well, you made $30,000, you got a $20,000 loss. Your taxable income will be $10,000. That looks a lot better than your taxable income being $30,000.
Right.
So, absolutely, please, yesterday, that's when you're supposed to use your sole proprietorship as the means of writing things off on your taxes. Absolutely, yesterday. So to answer your question.
Okay, so hopefully, LaWanda, you got that. That is, as soon as you got that sole proprietorship going, then all those expenses that you have related to that, related to your new journey as an adjuster, you want to file those under your sole proprietorship, not your work related. It best benefits you when you do it that way.
And one other thing, not to cut you off, you might want to look into the LLC sole proprietorship, because a lot of people don't know that you can have an LLC as a sole proprietor, as a partnership, and as a corporation itself. So you might want to check into that or call me.
And we'll make sure we provide that information at the end. Okay, and then let's see. Now, I think that's just about it. I want to say before we wrap this up, and I want to say thank you, because you are my accountant, and I'm so grateful that you've helped me as you have, because before you, I didn't know any better. I was just, and nothing against H&R Block. I think they do a great job with whom they work with, but I'm so glad that I have a tax consultant and a master accountant.
That's right.
That makes a big difference.
I appreciate that.
Than a tax preparer. Exactly. And so I want to thank you and let you know how much I appreciate you, and hopefully this will, you're so great. That's why I want this opportunity for
let's
us
talk about
to see
that
you.
for just 1 second.
Yeah.
The tax preparer versus the tax consultant. A tax preparer, everybody has to realize that these folks that work at these big chain companies, H&R Block and other, they get paid hourly. They do not get paid by the return. They do not get paid by the amount that you receive on your return. The company does. So, I worked for a tax preparation company some years back, and I was making about $8 an hour. So,
wow. Just
to give you the sense of, whether I did 1 return or 10 returns, I still was getting paid $8 an hour. So, you got to think about, people's mindset that are taking care of you. And doing taxes is not a 30-minute thing. It's not a 10-minute thing. It's something that can take hours. And they're only going to go by the information that you give them. If you don't know to give them all of this information, they're not going to ask for it. They're going to ask you for your W-2, or if you're in business, your K-1, or your 1099. And it's up to you to give them that information. But you need to know about all of these different types of forms and tax breaks or tax forms that are available to you. So definitely know the difference between a tax preparer and a tax consultant. The tax consultant is going to conduct an interview with you. That's what I do with all of my clients. I conduct an interview with you just to see where you're at. And even if I know you, I still ask these questions because I want to get a sense of where you are right now. I could have known you for years, but I'm not in your household. Right. So I don't know exactly what's going on. I need to know what's going on so I can better serve you. They're not going to ask you those questions. They're going to say, when you come in, they're going to say, what do you have? And that's it. So if you leave a form out, it's really on you. It's not on them. And they're not going to take their responsibility. So I get a lot of my clients from tax preparers' offices or people that have had a bad run-in with tax preparers. So
yeah. that's how pretty much I got with you myself. Yeah, I had a pretty bad experience. So I knew I needed somebody with a little bit more know-how as far as handling my taxes. So
Right.
yeah. So
And I was in the same field with you,
exactly.
so I can better serve you because I know the ins and outs, or I know exactly what I was going to write off on my taxes.
Right,
So I was
right.
going to give that information to you.
Exactly. Exactly. Well, that sounds good. Well, I just thank you for coming out, taking the time to sit with me today, and so in closing. Is there anything that you see that are common mistakes? Because I know you're doing taxes for everybody. You're not just doing the individuals. You do nonprofit. You do for profit, so forth and so on. But as far as I guess when it comes to the adjuster taxes that you've done, or just independent contractors or those independent business owners, those entrepreneurs out there, is there any common mistakes that you see where people are not claiming on their taxes, or that they should, or something that they're making a mistake on where they're basically underestimating themselves and it's affecting the outcome?
Well, the biggest mistake that I see is people are rushing. People are in a rush to get their taxes done. They're in a rush to get that money back. But calm down. Remember all of the places that you work throughout a year, because if you leave one W-2 out, the IRS is going to tax you, they're going to ask for a payment of that full amount that you left off of your taxes because you were rushing.
Oh, wow.
So stay calm, contact all of the places that you work throughout the year, and make sure you get your information. I mean, it's the same thing with investments. If you receive some money, or you took some money out of your 401k, or you receive interest payments throughout the year, you want to make sure that all of that goes on your taxes. We have to keep this in mind. The IRS already knows everything. They know everything. They're waiting on you to make a mistake.
Oh, wow.
And then they're going to capitalize on it. I had a client, she had another job, and she made $17,000 at this job. Not a lot of money, but she omitted that from her taxes. So she gets a letter in the mail. This is years later. She gets a letter in the mail. The IRS is claiming that she owes them $17,000. They're going to ask for the full amount of that money that you omitted.
Wow.
Because in their eyes, you have that money sitting in their bank account somewhere.
Exactly.
So they want in. They want in.
Gotcha.
They want that money. It's up to you to not get, and I want to make sure that I say this to everyone. Do not get frazzled or upset if you receive an inquiry from the IRS.
Okay.
They live by the shoot first and ask questions later mentality.
Okay.
It's not the end of the world for them to ask you for more information. You're not doing anything illegal. Just give them exactly what they asked for, see it through to the end, and you're going to win. Because you, like I said, I keep saying it, I want you to understand this, because we need to let them know this. You don't have that money sitting in a bank account somewhere. You spent that money. You need to let them know how you spent it. That's it. So, I know I may have gotten a little bit off track, but
that's okay.
I want to make sure that everyone understands that. That's what we want. We want you, I say we, talk about my business, my company. We want you to have all this information, so.
All right, that sounds good. Thank you. Thank you so much.
Thank you. I appreciate the opportunity.
Yeah, so stay calm, right, and relax, and it's going to be okay. When you get those letters, and I've gotten them myself, it's all right.
I have as well.
Yeah, so they're just going off. They notice you made some more money, and they just want taxes on that. So
exactly, taxes on top of that. You don't owe $17,000, like I stated earlier. You owe the taxes from $17,000.
There you go.
So,
Okay, good. Now, how long should somebody, really quick, this is my personal question, how long should somebody hold on once they've got all these receipts, come on, because we know we're keeping a lot of information here, from hotel bills to receipts to whatever else. How long should, once I file my taxes and they've gone through, how long should I hold on to that?
7 years.
7 years?
7 years.
Okay.
7 years is as far as they will go back and try to audit you.
Okay, 7 years, everybody.
7 years.
All right, don't have to hold on to it no longer than that. So
That's
you got
right.
anything 10 years old, let's get rid of it. Let's put it to the shredder. Or I guess 7 years or older, okay? So I got to do that myself. Okay, so before we go now, everybody, we've been talking to, hi, I'm Charlene Hoskins, President and CEO of TPAS LLC. You're watching TPAS TV, our Now What interview series. We've been sitting here talking with Montario Patman of Patman Accounting Services, asking those hard, tough questions about taxes. What to file, what not to file, what should I be paying attention to, okay? And we've had a really great interview. Thank you so much again for coming out.
Okay.
And
Appreciate that.
we really appreciate you taking the time. Yeah.
Okay, so if anybody needs to reach me, my phone number is 314-732-2854. That's 314-732-2854. Or you can email me at md as in David, Patman, that's P as in Paul, ATTMAN @gmail.com.
All right, everybody get that? That's area code 314-732-2854. That's for Montario Patman of Patman Accounting Services. He is the owner, president, and CEO of Patman Accounting Services, okay? And if you want to contact him via email, that's mdpatman@gmail.com. All right?
All right.
All right, well, thank you so much.
Thank
It's
you.
been great.
I appreciate it.
All right, thank you. Until next time, I'll see you later.